Just starting everything. Good afternoon, everyone, and welcome back. My name is Sourabh Mutha, and we're looking at the fast track course for CA Inter. Guys, we'll get great marks at tax if you understand all these concepts, and when you start looking at examination questions, you'll realize how good you get at tax. Learn the shortcuts well, revise them often. Right now, we're looking at a chapter called TDS, TCS Advanced Tax. We've finished all the concepts. We're diving literally into the sums. Very important. Only two more chapters left. That too, one of them is aggregation, and one of them is a small chapter called Return of Income. So that is what we're going to do. But right now, it's time to upload the module, and let's do this. This is that time of the day where you have eaten a nice lunch and you might feel sleepy. So constantly keep a check on yourself and wake yourself up. Guys, this is it. Moving to the last page so that we can look at the different sums. Here we go. Let's start with this one, and we'll also see illustrations, but right now this is the first one. Question number 1. All right. Ashwin, doing manufacture and wholesale trade, furnishes you the following information. That means, guys, Ashwin is into business. We'll have to see whether he's a small individual, small HUF. Total turnover, guys, this is the question of 21-22. So we have to see the last year. Last year, his turnover is more than 1 crore. So hence, he's not a small individual and he's not a small HUF. Just keep that in mind. He's not one of those. Examine whether tax deduction at source provisions are attracted for the below said expenses incurred during the year 21-22. Keep your calculators handy, guys. We might have to calculate that as well. Interest paid to UCO Bank. Guys, when you have paid interest to UCO Bank, remember, even if you're a big individual, big HUF, doesn't matter. On this, there will be no TDS because 194A specifically exempts that. So here is the answer. TDS under 194 is not attracted in respect of interest paid to a banking company. Next, guys, contract payment to Mr. Raj, 2 contracts of 12,000 each on 12th of December 2021. Guys, you're paying to a contractor, but the payment is not more than 30,000, and hence this one, TDS provisions are not attracted in this case. Shop rent paid to one payee, 2,50,000. Is it more than 2,40,000? Yes, and you are not a small individual, small HUF. So on this, guys, this is a shop. So 10% TDS under 194I because initially you rent. So this is tax has to be deducted. And last, commission paid to Balu, 7,000. 194(8) says that only if it's more than 15,000, deduct 5%. So in that case, there will be no tax since it does not exceed 15,000. Very, very nice question and very quickly done. Question number 2, guys. Any questions, please flag it off immediately. Compute the amount of TDS on the following payments by Messrs. S. See, guys, who's paying because that also matters a lot. As per the provision of the Income Tax Act, guys, these are the dates, these are the payments. I'm giving you guys about 1, 2, 3, 4, 5, 6 sums, so about 4 minutes before we start discussing. Over to you all, please. If you can identify the section and the TDS rate, please. Alright, let's do this, guys. This is Messrs S Limited and for the financial year 21-22. So this one is the question. Just one second. I'm sorry. Yes. So on the 1st of October 2021, payment of 2 lakh to Mr. R, a transporter who owns 8 goods carriages and furnishes a declaration to this effect along with his PAN. Guys, 194C generally applies to contractors, but if it's a transporter having up to 10 goods carriages and giving a PAN, no TDS will apply in this case. So you can make the full payment without deducting anything. Payment of fee for technical services of 25,000 and royalty of 20,000 paid to Mr. Sham. Guys, I don't know if I mentioned it, but of course this is 194J PT NRD, and here per category it is up to 30,000. So here, since per category is up to 30,000, no TDS will be deducted. This is not like 194I where you total it up per person. This is per category more than 30,000. So here also you can pay without deducting TDS. On 30th June, payment of 25,000 for repair of the building. Again, repair is 194C, no TDS because the payment is within the specified limits. Payment of 2 lakh for purchase of diaries made according to specifications of S Limited. However, no material was supplied. If the material is not supplied, guys, it is not a works contract. It is a purchase on which there is no TDS. Next, on the 1st of Jan 2022, payment of 2,30,000 made to Mr. Bharat for compulsory acquisition. Guys, compulsory acquisition is under 194 LA, legally acquired. Only if it is more than 2.5 lakh there will be TDS. So on this there is no TDS. And payment of commission, again guys, 194H helper, only if it is more than 15,000. So here also TDS does not apply. So in fact, none of the cases TDS applies. No tax. Again guys, no tax. Again, less than, no liability to deduct TDS. Again, no liability, and not attracted. So this one entire thing is there is no TDS on the entire thing. Guys, this is question number 3. It has 3 subparts to it. You get 3 minutes to do this before we start discussing TDS provisions and TDS amount. Over to you all, please. Alright, let's do this, guys. Rent paid for hire of machinery by B. So the moment it is rent, there is 194I. Initially you rent, and in that case it is paid to Raman 2,60,000 on 27th September 2021. Since it is more than 2,40,000 rupees, you need to deduct TDS, but not at the rate of 10%, but only at the rate of 2%. Fee paid to Dr. Srinivasan by Sundar HUF 35,000 for surgery performed by a member of the family. On a member of the family. Guys, this is 194J. Because doctor is a professional, you are paying more than 30,000 rupees, but this is a personal purpose and hence there will be no TDS. And ABC and company paid 19,000 to one of its directors as sitting fees. Again guys, 194J, but here the limit is 30,000. The limit does not apply to directors sitting fees, and hence TDS at the rate of 10% will have to be deducted. So guys, this is the answer. The first one at the rate of 2%. The second one, it is not attracted because for a personal purposes, so there will be no calculation. And the third one is basically generally above 30,000, but that limit is not applicable in respect of director. So on director 19,000 you will have to deduct 10%. Alright guys, next looking at the fourth question. In this fourth question guys, the first one is not there because they are specifically mentioned that you don't have TDS payments to non-residents. So the first one is a mistake, don't worry about it. Move on and do the second, third and fourth. Over to you all, 2 minutes for this before we start discussing.
Guys, back to you.
Alright, let's do this guys. Examine the applicability of TDS, the rate and the amount. Payment made by a company to Mr. Ram, a subcontractor, 3 lakh with outstanding balance of 1 lakh 20 shown in the books on 31st March 2022. Guys, you are making a payment to a contractor under 194C. This will be subject to TDS at the rate of 2%, but since he is an individual, at the rate of 1%. Now on what amount? It's on payment or credit, whichever is earlier. So amount that you paid as well as the amount that is liable to be paid. So on 4,20,000 you'll have to pay at the rate of 1%. So guys, 4,20,000 at the rate of 1%. Alright. Next, winning from horse races 1,50,000 paid to Mr. Sham, an Indian resident. This is under section 194BB because it's a bigger bet. Congratulations, he won 1,50,000. So the government wants 30% of that. And 2 lakh paid to Mr. A by the state of Uttar Pradesh on compulsory acquisition of his urban land. 194LA legally acquired says only if it's more than 2,50,000 then deduct TDS at the rate of 10%. So no TDS in that case. Guys, the questions will get very easy and predictable and easy to answer if you know the basics well. Briefly discuss the provisions relating to payment of advance tax on income arising from capital gains and casual income. Read the question guys, think about the answer. I'll give you 1 minute before we discuss together. Alright. Guys, in this case, I told you whenever you are paying advance tax under section 208, it does not apply in 4 cases: A, B, C and D. And in that, capital gains is here, asset sale, and casual income is here. In both these cases, you can't estimate it, and hence the interest will not apply. 234C will not apply in these cases unless, guys, you actually earned it, and from the quarter you earned it, you'll need to start paying. Since it is not possible for the assessee to estimate his capital gains or income from lotteries, etc., it has been provided that if any such income arises, then the entire amount of tax payable after considering TDS on such capital gains or casual income should be paid in the remaining installments of advance tax which are due. Where no such installment is due, the entire tax should be paid by 31st March of the relevant financial year. That means if you get something between 15 March and 31st, you should pay the entire thing by 31st. Else, guys, in that case, there will be interest. Otherwise, there will be no interest in A, B, C, D's cases. Interesting, guys. This is Mr. Jay. Read the question, take your time, take 2 minutes, and then we will discuss. This is a question on advance tax section 208. Alright, Mr. J, having total income of 8,70,000, did not pay any advance tax during the year. He wishes to pay the whole of tax along with interest, if any, on filing the return of income in the month of July. What is the total tax which Mr. J has to deposit as self-assessed tax along with interest if he files a return on 29th July? So first all, let's calculate his tax on 8,70,000. Assuming, guys, he is under 60, 12,500 up to 5 lakh. 1 lakh up to 10 lakhs, and sorry, my bad, you will have to do his calculation. So 5 lakh to 8 lakh 70 on 3 lakh 70 at the rate of 20%. So his tax is basically 89,960. I'm just putting that final number here, 89,960. This is his tax liability along with surcharge. There is no surcharge because only 8 lakh 70, and there is cess. He will not be subject to a rebate because his total income is not up to 5 lakh. Remember that. Now, guys, his tax liability is more than 10,000, so he should have paid advance tax, but he is not paid advance tax. So the first sections you will see is 234C. There will be 4 234Cs. The first one will be 15% of 89,960. I'm just checking that answer, guys, here. On 89,970, if you do 15%, amount due and unpaid rounded off to the nearest 100, ignoring fraction. So that is 13,400 into 3% into 1 into 3 months into 1. The last one is into 1 month. Otherwise, it's all into 3 months, 3 months, 3 months, and it's all into 1%, 1%, 1%. So this is the interest that he'll have to pay under section 234C. Guys, I don't seem to have a calculator here with me, but if you just calculate 89,960 into 15%, you will get your answer and you will have to round it off. Ignore the fraction and round it off to the nearest hundreds. But there is another interest section which is called 234B. 234B says if you paid 90% of the total advance tax, no problem, but he's paid nothing. So on the entire 89,960, he will have to pay at the rate of 1% till he files the return, that is April, May, June and July for 4 months. So here we go. Interest under 234B is attracted when the assessee who is liable to pay advance tax has failed or has paid less than 90%. Here guys, he has not paid any amount, and hence on the entire amount 89,960, of course rounded off, removed 60, so 89,900. It is at 1% for 4 months, that is April to 29 July. So this plus 89,960 plus this amount is what he will have to totally pay. Mr. J needs to pay 98,091 as total of tax and interest on or before filing the return on July 2022. Guys, these are all the questions that are in the module, but we will not stop here. I am just looking at some more illustrations. Let's see if we can find some more illustrations. This is on TCS. This is TDS. No, this is advance tax. Perfect. This is TDS. So we are looking at some illustrations from TDS chapter. Alright. Guys, this is the illustration. Take a minute, read it. They have asked you to compute the interest chargeable under section 201(1)(a). Remember, on whatever is the shortfall, if you've already deducted but not paid, then 1.5%, otherwise 1% into the number of months. Even 1 day of the month will be considered as a month. So please check the question, try and answer it, and then we will discuss it together as well in 2.5 minutes from now. Alright, an amount of 40,000 was paid to Mr. X on the 1st of July 2021 towards fees for professional services without deduction of tax at source. So you have not deducted tax in source, so interest will be 1%, and you should have deducted in the month of July, but then finally you deducted it in the month of February. So July, August, September, October, November, December, Jan, Feb, so 8 months. So 1% into 8 months, and now on the shortfall. So on 40,000 rupees at 10%, so on 4,000 into 1% into 8, this is the first calculation. 4,000 into 1% into 8 months, that is 320 is the interest. in the first case. Now in the second case, you made a payment of 50,000 and 50 and 40, 90,000, 9,000 was deducted in February but paid only in June. So again there is a delay. That will be 1.5%. You should have paid by March, but you paid it in June. So March, April, you should have paid by March. Yes. So March, April, May and June, 4 months, and the shortfall is this time 9,000. So that is the calculation. 9,000 for 4 months into 1.5%. So these two are the interest amounts. Looking at more illustrations. Perfect. Let's do this question, guys. Mr. Gupta, a resident Indian, is a retail business and his turnover last year, that is 2021, was 12 crores, definitely subject to audit. He regularly purchases goods from another resident, Mr. Agarwal, a wholesaler, and aggregate. This is 194Q. We've not discussed that. I told you after TCS, so it's a good time to discuss it with an example only, guys. So he's a high value seller, guys. His last year turnover is more than 10 crore. So in case of high value seller, this is Mr. Gupta, and he's purchasing goods from another wholesaler. So when he sells, he will be subject to TCS, and if he's subject to TCS, 194Q will not apply. But here, let's say they are going to say at the end that TCS provisions will not apply. Somewhere they will say that. One minute. Okay, so they've not said that, but it's under 194Q. Q is the same thing, guys, just like 2061H high value. 194Q says that if you purchase more than 50 lakhs, then you will need to, whenever you are paying this person, you will need to deduct at 0.1% on amounts above 50 lakhs. So let's check. He has purchased goods from another resident, Mr. Agarwal, a wholesaler, and aggregate payments during the financial year was 95 lakh, 20 lakh, 25 lakh, 22 lakh and 28 lakh. So 20 to 25, 45, 45, 55, 65, 67, 67 and 28 is 95 lakh. Assume that the said amounts were credited to Mr. Agarwal's account in the books of Mr. Gupta on the same date. Mr. Agarwal's turnover for the year was 15 crores. So even this guy was a high value seller. Mr. Agarwal is also a high value seller. So let's apply 194Q. Since Mr. Gupta's turnover exceeds 10 crores and payments made to him, Mr. Agarwal, are more than 50 lakh rupees, then he is liable to deduct TDS at the rate of 0.1%. Same thing above 50 lakh, that is around 45 lakh. No tax is to be deducted on the payments made on 1st June and has not exceeded. So basically, till the date it's not exceeded 50 lakh, you will not deduct. So on these payments, you will not deduct TDS, like the first payment of 20 lakh and the next of 25 lakh. Till that time, you did not exceed 50 lakh. So on these two, no TDS. And after that, on this 12 lakhs or on this 28 lakhs, you will deduct TDS. So tax of 1700 has to be deducted on these two payments. What if, would your answer be different? Mr. Gupta's turnover was 8 crores, all the facts remaining the same. Guys, if Mr. Gupta's turnover was only rupees 8 crores, that means he was not high value, then 194Q will not apply. However, TCS would be attracted because Mr. Agarwal is selling. So hence, I'm just giving you when the two things will apply. So this is Gupta and this is Agarwal. Agarwal's turnover last year was more than 10 crores. So he's a high value seller. And when he sells, he has to collect also TCS under 2061H. But if Agarwal is also high value and if Gupta is also high value, then in that case TDS provisions will apply under section 194Q. In no case both will apply together. Alright. And last, guys, if you don't give up PAN, then in case PAN is not furnished by Mr. Agarwal to Mr. Gupta, because it's only 0.1%, then you have to double it up or 5%, whichever is more. That is under 194Q. And in case of TCS, it is double it up or 1%, whichever is higher. So in TDS it's 5% and in TCS it is 1%. Guys, just repeating, 194Q and 2061H. First up, both will not apply mutually. If one applies, the other will not apply. So in this case, if 194Q is being applied, 206C, 1H will not apply. In Q, the transaction is more than 50 lakh, TDS rate is 0.1%. Same thing here also, if the transaction is more than 50 lakh, then TCS rate will be 0.1%. Here, if no PAN given, then 5% or double, and here it is 1% or double, whichever is higher. Important, guys, this Gupta and Agarwal question. Let's see more illustrations, guys. One more illustration. Here we go. This is the new section 194P. Good that we are doing illustrations. Have a look, guys. Try and see what this is, and then we'll discuss it together in about 3 minutes from now. Alright, Mr. Sharma, a resident Indian, age 77 years, gets pension of 52,000 per month from the UP state government. The same is credited to a savings bank account in SBI Lucknow branch. In addition, he gets interest at 8% on fixed deposit of 20 lakh with the said bank. Out of the deposit 20 lakh, 2 lakh represents 5-year term deposit made by him on 1st April 2021. Interest on savings account credited to his savings bank account is rupees 9,400. So guys, he is getting pension plus he is getting interest both in the same bank account. So under 194P, he is a specified senior citizen notified, and TDS will have to be deducted at average rates. From the above facts, compute the total income and tax liability of Mr. Sharma for the year, assuming that he has not opted for section 115 BAC. Guys, here 52,000 into 12 is his salaries income. Next, you will have to calculate interest at the rate of 8%, and that will be the interest income. Also interest on saving bank account, you will give deduction under 80 TTB of 50,000 rupees because he is a senior citizen, And while calculating pension, you'll have to minus standard deduction, SAP minus SEP, because that is salaries. So I'm just showing you the calculation here. Pension less standard deduction, this is a salary income. Interest on FD, interest on saving account. From that 5-year term deposit, you'll minus 1.5 lakh because it was made in this year, and you'll get 80 TTB. So this is the total income. On this tax liability, up to 3 lakhs nothing, from 3 lakh to 5 lakh 10,000 and 43,500 into 20% plus surcharge and cess. No surcharge, of course, cess. So this is 19,450 is his tax liability. What would be the amount of tax deductible at source by SBI, assuming that the same is a specified bank? If Mr. Sharma required to file his return of income if tax deductible at source has been fully deducted? No. So they will have to deduct it at average rates. Here we go. SBI, being a specified bank, is required to deduct tax under and remit the same to the central government. In such a case, Sharma will not require to file his return of income under section 139, which we will see next in return of income. Would your answer be different if the FD was with Canara Bank? Yes, answer would be different. Then it is not a specified bank and it will normal provisions will apply. If the FD is with a bank other than SBI, which is the bank where the pension is credited, then Mr. Sharma would not qualify as a specified senior citizen, consequent to which SBI would liable to deduct tax under 194A. Would not be liable under 194P, and they will have to deduct under 194A, and he will also have to file his return of income then. Very, very good question. 194P. Going back, guys, doing questions is the key. The more you do, the better you get. Here is the question. Very interesting question on 194M. Try and see these two and then we will discuss. Alright, let's do this, guys. So examine whether TDS provisions would be applicable. Mr. Ganesh, an individual carrying on retail business with a turnover of 2.5 crores, so he's not small and he's an individual, he's not small. Contract payment, repair of residential house, guys, this is for personal purposes, so under section 194C this will not apply, and 194M will not apply to him, so no TDS in this case. For business purposes, so 194H will definitely apply. That's the first one, just showing you the answer. No TDS and 194H will apply. Let's go on to the second one. Mr. Rajesh, a wholesaler trader, 95 lakhs last year, so small individual. So contract payment for construction of residential house, 194M, 20, 15 and 20, that is 55 lakhs in the same year, and hence TDS will apply on this entire amount. Yes, 194M. Next, Satish, a salaried individual. Salaried, guys, can never be a small, can never be other than a small. He is definitely a small because he does not have any business, so he will not cross that turnover. So payment of brokerage, 51 lakhs, 194M will apply. And again a pensioner, so again a small individual, but 48 lakhs, so 194M will not apply. So third one will apply, fourth one will not apply. Going back to some more questions, some more clarity, some more marks. XYZ makes a payment of 28,000 to Mr. Ganesh towards fee for professional services, another 25,000 on the same date towards fees for technical services. Guys, both are under 194J, both are to the same person, but the category is different and hence 30,000 limit is different and hence TDS will not apply. Next, try reading this, guys, once on your own and then we will discuss. Very simple question, guys. Mr. X, a salaried individual, pays a rent of 55,000 per month to Mr. Y from June 2021. Is he required to deduct tax at source more than 50,000, guys? And he's a salaried individual, so under 194 IB, impossible to buy. TDS has to be deducted, but not every month, at the end of the year. If so, when he's required to deduct tax at the end of the year, also compute the amount of tax to be deducted at source. Would your answer change if Mr. X vacated in 31st December? Then he has to deduct in December. So here, since Mr. X pays rent exceeding 50,000, TDS will apply. Thus, 5% of 10 months into 55,000. He's taken it from June, so 10 months. April, May is not there. He'll have to be deducted from the rent payable for March 2022. If Mr. X vacated the premise in December, then April, May, Jan, Feb, March is not there. So basically about 7 months. So 7 months has to be deducted in December. If Mr. X Y does not provide his PAN number, it will be deducted at 20%. So the rates would change and the amounts will also change. Perfect. Mr. X sold his house property in Bangalore as well as his rural agricultural land for a consideration of 60 and 15 lakh respectively to Mr. Y. So on 15 lakhs there will be no TDS, but on 60 lakhs there will be 1%. He has purchased the house property and the land in the year for 40 and 10 lakhs respectively. Compute. In the hands of Mr. X we will not see because that's a capital gain sum. On 15 lakh there is nothing to be calculated. On the other one there will be 80 SCP. Period of holding is long term, so cost will be indexed and all of that. And guys, from Mr. Y, TDS implications will be there. In case of Mr. Y, I'm only looking at Mr. Y's TDS implication. In case of Mr. Y, there is also gift taxation because he's got something for inadequate consideration. But we are only looking at TDS implications of 60 lakh at the rate of 1% will have to be deducted and paid. Here we go. Since the sale consideration exceeds 50 lakh, Mr. Y is required to deduct TDS at the rate of 1% of 60 lakhs. But a good question nonetheless to answer. Interesting, guys. Moon TV, a television channel, made a payment of 50 lakhs to a production house for production of a program for telecasting as per the specifications given by the channel. So they gave the specification also and they got the thing made. What would the payment be under 194C? Yes, such a payment would be under 194C. This is the contract. Therefore, the payment of 50 lakhs made to Moon would be subject to TDS under 194C. Examine whether the provisions of TDS would be attracted if the payment was made to Moon TV for acquisition of a telecasting rights of a already produced production house. That means if already produced and you're buying, then in that case it's not a contract, and hence 194C will not apply. Because works contract difference and purchase contract and purchase is different. Guys, this is not there because non-residents are not there, and hence I'm very sure they will not be questioning that in your exam. And last, let's do this illustration as the last one. ABC Limited makes the following payments to Mr. X, a contractor: 20, 25 and 28. All of these are below 30 and also below 1 lakh, and hence nothing. And in March it's 30,000, so it goes above 1 lakh, so hence on the entire amount there will be TCS at the rate of 1% since he is an individual. Perfect, guys. With that we are ending this chapter, moving towards the next one. Enough questions done on this. Nice. The next chapter is return of income. 2 minutes and we start return of income, and once we finish return of income we'll do the question same pattern, and then we'll do computation and sums on that same pattern. So the next one session that we have, we will only and only focus on examination questions. All the best and see you in 2-3 minutes, and let's continue with return of income then. Guys, get ready for the next new chapter in 2 minutes from now. Alright, and we are back, guys. Return of income is the second last chapter in the fast track course. So this is return of income. Very good shortcuts, some really recent amendments, and a presumption or a prediction that one question of 4 marks will be there from this chapter. So let's do it really well. Guys, what is return of income? First, let me give you a background. See, during the year a lot happens. You earn income, you have deductions, you have exemptions. So a lot of things happen during the year, and your year is 21-22. And when all these things happen, you are supposed to tell the government. So the government says that after the year gets over, you please send me a report card of what has happened to you during the year, which heads of income you've earned money, how much tax has been deducted, how much tax has been paid, what is the interest. All of that you tell me by filing a return of income. So this is a report card, and generally a return of income has to be filed by people who have income. If you're a student and you're studying right now on an academy and you're just generally studying and you don't have too much of income, then maybe you don't need to file a return of income. So who needs to file it? That will be answered in this chapter. When do you need to file it? That will be answered in this chapter. Guys, sometimes you file and there are mistakes, so can you revise it? Can you file it late? Do you need some documents or some attachments with this chapter or with this return? Can the return be declared defective and can it be sent back? Who needs to sign it or verify it? And do I need to pay tax along with this? All this and more, and any interest to be paid along with the tax, all this and more will be discussed in this chapter. So very nice chapter, and there are some amazing shortcuts to help you remember all the sections and everything in detail. Guys, mainly the sections here are very simple. There is a main section, section 139, which talks about most of the return of income chapter is in this section. And of course there is a section called section 140 and 140A, which we will also discuss in this chapter. And of course the interest section, which we've already discussed, 234C, which checks you 4 times. C is for checking. 234B, which comes baad mein, and 234A. So it's reverse, first C, then B, and A. A we will study in this chapter itself. So this is return of income. I'm uploading the quick book also, so we can, as in when we finish a section, we can also look at the quick book. So just uploading that, 1 minute. Here we go. Just keeping it on the quick book on that sheet. Somewhere around 40-50. The entire quick book is about 60 pages. So somewhere at the end is return of income chapter. Here we go. Perfect. So I'm just adding a sheet before that, and let's start a chapter called ROI. First is a section called section 139.1, which tells you who needs to file the return of income. So here companies and firms have to compulsorily file. That's the shortcut, guys. Compulsorily file C and F. What is C? C is companies. And what are F? F are firms. And when I say firms, I mean partnership firms and also LLPs. They need to compulsorily file, even if they have 0 rupee income or 100 rupees profit or 100 crore rupees profit or a loss, they need to file the return of income. And for the others, they need to file it in 2 cases. One, if their total income, if their gross total income plus 54 exemption, 54 series exemptions is greater than basic exemption limit. So remember this formula. When their gross total income, guys, generally gross total income feels very neglected. It feels like a stepchild because no one uses it to calculate tax. But now we are using it, we are giving it importance. So GTI plus your 54 series exemptions should be greater than basic exemption limit. So basically, if my gross total income is just 1 lakh, but I have saved some 54, I have bought a house, I sold a house, and I saved exemption of, let's say, 10 lakhs, is that greater than basic exemption limit? Yes. So will I have to file my return of income? Yes. Or if you drink coffee. So for companies and firms, you don't have to check all of this. For others like you, me, etc., we have to check this. Either the first one, GTI plus 54 greater than basic exemption limit, or coffee. What is coffee? Let's check what is coffee. First is C. If your current account have had deposits of more than 1 crore rupees during the year and you are still not filing your return, then why are you not filing it? We want to know who are you that your current account has so much deposit of more than 1 crore. This one is only for ROR, residents and ordinary residents. If you have any asset outside India, O is outside India, guys. If you have any asset like any house, any gold, any partnership firm interest, any interest in an entity is also property outside India, then you need to compulsorily file your return. Even if your income in India is 1 rupee or 0 or nil, nothing, doesn't matter. We want to know who you are. If you have spent money on foreign travel for yourself or for anyone else greater than 2 lakhs in this year, then we definitely want to know how are you affording to do that, how are you spending that, we want to know you, especially because you are saying your income is not more than basic exemption limit. And if your electricity expense is greater than 1 lakh per annum, then we want to know how are you affording such high electricity expense. So in all these 4 cases, coffee, you will need to file your return of income. So just repeating, who needs to file it? Companies and firms, compulsory. Other than that, if your GTI plus 54 series exemption is greater than basic exemption limit, and other than that, if you are in coffee, then you will have to file your return of income compulsorily. Yes, compulsory. Now next is, okay, we figured that who needs to file it, but by when do we need to file it? That is important. So let's try and see. Of course, guys, nothing is filed during the year. So during the year, you don't file any return, 21-22. But in the assessment year, you will need to file it in the previous year, assessment year 22-23. You will have to file it. First, people who are not subject to audit. So no audit required. If no audit is required, that means you don't have to go to a CA and he will not have to give you an audit report, all of that. Then you don't have to spend too much time after the year ends in March, April, May, June, July. So by 31st July, you have to file your return. This is everyone who is not auditable. But if you are subject to audit, example, someone has to come and check your books of accounts, etc., then 31st October, this used to be September earlier, but now it's made to 31st October. And if you have international transactions, which we will see at CA final, then it is basically 30th November. So we have 3 due dates. Yes, 3 due dates. Now let's talk about this date. If you're a partner in a partnership firm, then your due date and your partnership firm's due date should be the same. Yes, should be the same. Earlier it was different, but we don't care about what it was earlier. Now what is the case? Guys, if the partnership firm is auditable, then it will be 31st October. So all the partners will also get 31st October. The logic is, even if the partner is not auditable, but only when the firm knows how much they have to deduct on the salary and interest paid to partners, only then we'll know how much to include in the partner's salary income and interest income. So hence one is dependent on the other, so they share the same date. And if the partnership firm is not auditable, then both of them will be July. So I can happily say, guys, that both partner and partnership firm will always have the same due date. Let's have a look from the book, guys. Section 139(1), return of filing is compulsory for companies and partnership firms, compulsorily file. For others, ROI is to be filed if GTI plus 54 exemption is greater than basic exemption limit, or coffee. Current account deposit more than 1 crore. Foreign asset outside India, including a bank account or interest in an entity, but only for ROR. Foreign travel greater than 2 lakhs for self or for the others, and electricity more than 1 lakh. 31st July, 31st October, 30th November. In case of partnership firm, even the partners can file their return by 30th October. So basically they will have the same date. Alright. Guys, over to the next section. We are talking about return of income, but is there a return of loss? Can I file a return of loss? Is that supposed to be written in red ink or something like that because I made a loss? No. They say that it's nothing, it's the same return you have to file, but it will be called return of loss under section 139(3), and this has to be filed on time or within time. Just 1 second. Alright, so return of loss is basically the same return, but the only thing that you have to file it within the due date. Why? Is because there is a section called section 80, which is a villain in the story. Section 80 says that if you want to carry your losses, like your business loss, like your speculative business loss, or specified business loss, or capital gain loss, or losses from horses, etc., then we will only allow you to carry it forward if you file your return of income on time. Set off you can do. Example, if I have a profit of 100 in a business and a loss of 20 in another business, can I set it off? Yes. But if I don't have any profit and I want to carry this 20 to the next year, then this year's return has to be filed on time. Basically, they are saying is if you don't file your return of income on time, then that year's loss, not previous years, only that year's loss will not be able to carry forward. Example, this is 21-22 and this is the loss, 30 is the loss of 2021. This return was filed on time, so I can carry it forward to the next year, and this return was not filed on time, so this I cannot carry forward, but 30 I can still carry forward. So basically saying that only that year's return, that year's loss cannot be carried forward, whichever year's return was not filed on time. So you better file it on time. That is what section 80 says. But there are 4 exceptions. One is house property loss. They are very thankful for you to have bought a house property, so loss, even if you don't file it on time, or even if you don't file it at all, you can carry it forward. Same for scientific research expenditure and family planning expenditure and unabsorbed depreciation. In all these 4 cases, whether you filed your return, whether you filed it late or not filed it at all, doesn't matter, you can carry forward these 4 losses. So just showing you that section 193, loss return. In order to carry forward losses, the ROI for the said year has to be filed within the above due dates, else losses will not be allowed to be carried forward. Section 80. Exceptions 1, 2, 3 and 4. Now something that I am predicting will be there in your exam, which is belated return. Section 139(4). Can I file my return late? Yes, you can. Earlier, guys, you could file it late. There were some repercussions, which the short form is life. It impacts your life, but you could file it late till the end of the assessment year. That means your assessment year is this, guys, 22-23. You could file it till the end of the assessment year, but now they have changed it and they have made it 3 months earlier. So basically, can you file a belated return? Yes, but maximum up to 31st December. You can basically file it maximum up to 31st December. That's all. And remember, guys, if you are late, it will impact your life. That's a very, very good shortcut to remember what happens if you file it late. Because, guys, if they don't have any repercussions, everyone will file it late. So hence, life is losses will not be allowed to be carried forward. There will be interest under section 234A if any tax has to be paid. When you file your return, generally, guys, you don't need to pay any tax because everything has been done as TDS, TCS, advance tax. But if any tax has to be paid, you have to pay it along with interest. And there is a late fee which you will have to pay of 5,000 rupees. This late fee is under section 234F. F is fee, so late fee, that's very easy to remember. It's 5,000 rupees. But if your total income is up to 5 lakh, that means you're subject to rebate, etc., and you've not filed your return, then it will be 1,000 rupees. So it will impact your life. Let's see, guys. Here you can file it 4 months late. ROI can be filed anytime till 31st December. Earlier it was till 31st March, but now it's 31st December. But guys, if you don't file your return on time and they do an assessment called best judgment assessment, which we will see at CA final level, but if they do a best judgment assessment, then in that case you cannot file your return after that if they've already checked you. Consequences of filing your return late impact your life: losses, interest and late fee. What is late fee? It's 5,000 rupees per person and will be reduced to 1,000 if the total income is up to 5 lakhs. Alright, guys, I have filed my return, but I just realized I made some mistakes. Common mistakes are 80 TTA deduction you have not taken, 80 GG Ghar Ghar deduction you have not taken. So in that case, can I revise my return? They say yes, you can revise your returns as many times as possible. You can revise your return, but earlier you could revise it till the end of the assessment year, now up to 31st December, or by the time you are assessed, whichever is earlier. There is no charges of revised return, and revised everything you can change except the date. The date remains original. It's almost like you change your sense of dressing, sense of talking, etc., but your birth date will remain the same. So any ROI can be revised, however only till 31st December, can be revised any number of times. Everything and the ROI can be modified except the original date. So if you file the original return on time, even the subsequent one will be considered on time. Alright. Guys, next is 234A, impact your life. So they're talking about the interest. See guys, let's say I need to pay 1 lakh rupees total tax liability. Out of that, 60,000 has been paid through TDS. Let's say 10,000 has been paid to TCS. And let's say 10,000 was paid at one tax. So 60, 70, 80. So 20,000 is remaining to be paid. This has to be paid along with interest if I don't file my return on time. So if my due date is, let's say, 31st July and I file my return in September, then August and September I'll need to pay interest at rate is same 1% into 2 months. If ROI is filed late, then interest is to be paid on the tax payable, if any, at the rate of 1% per month or part thereof. Can I file bulk returns? Yes. The Income Tax Department and the Income Tax Act has a section for bulk return. Generally, employers use this bulk return option under 139(1)(a). Next, what are the particulars that need to be filed along with ROI? Guys, it's almost like you making an application for a job. Do you need to attach your documents, etc.? Same way, under 139(6) and 6(a), you need to attach a lot of documents, but nowadays with electronic filing, you don't need to attach any documents. You just need to provide the details. If you're subject to audit, then audit report. If you're supposed to maintain your books of accounts, then P&L account, cash flow statement, balance sheet, income and expenditure statement, etc., an audit report. And if you're not subject to supposed to maintain your books of accounts, then only basic details you'll need to file in. Next, 139(9) defective return. Guys, interesting. You filed your return, you paid the CA fees, but then an email came that your return is defective. When can your return be defective? There are many reasons when can your return be defective. If you have not verified it, plus if you have not filled in the details that are required to be filled in, plus if you have not attached any of those details like your P&L account, etc., you have not given, then it can be considered defective. And within 15 days of the notice coming to you, you should basically correct all the defects, otherwise it will be an invalid return. But guys, one exception, if you don't pay your tax along with the return, that is not a reason for it to be defective. So tax along with the return is not considered as defective. Just 1 second. Alright, that's 139.9. Now it's time for verification, guys. Here it is, 139.9 defective return. If ROI is not supplemented with the details like P&L, balance sheet, etc., or not verified, then it will be considered as defective. Defect to be corrected by the assessee within 15 days, else the ROI would be considered invalid. ROI is return of income, not return on investment. Non-payment of tax along with return does not make the ROI defective. Now guys, who's supposed to verify the returns? It's almost like who signs your check? Of course, you yourself. So section 140 says, then in case of individual, the individual himself or the guardian or the person who holds power of attorney. In case of HUF, the Karta, the co-partners or anyone holding power of attorney. In case of a partnership firm, the managing partner or any person holding power of attorney, and so on and so forth, need to verify the return. If the return is not verified, it will be considered defective. So for individual, HUF, company and firm, these are some people you should remember. 139B, that is boys, tax return preparers. Let me explain what is that. Guys, to go to a CA to file a return can get a little expensive. Just like in GST, we have something called GST practitioners. Here under 139B, there are tax return preparers called TRPs, who are basically people who can help you file your returns. Who are these people? These are anyone, but they cannot be some people. They cannot be someone who's a CA, someone who's a lawyer, cannot be this. Someone who is working other than working for a company. If you're working for a company, no problem. Someone who is working, that means if you're in a job, then you cannot. And if you are working in a bank, then you cannot help those with which you have banking relationships. Guys, that is 139B. B is boys. Those boys wear t-shirts which says TRPs. Auditable persons can't use TRPs. Yes, that I forgot to mention. If you are subject to audit, then you can't get your return file through a TRP. You need a PAN number, guys. You know, guys, for return filing, you need a PAN number. And PAN number you should ideally have, because most of the purchases that, let's say you're buying gold, or you're buying mutual funds, or you're buying an apartment, or you're buying a motorbike, motor vehicle, etc., you'll need a PAN number. So generally, if your sales are more than 5 lakh, or your income is more than some lakhs, or your financial transactions are more than 2.5 lakhs, then you need to get a PAN number. If you don't get, the assessing officer can also allot you a PAN number. And same with Aadhaar number. Here, guys, a new change has happened. Your Aadhaar needs to be intimated to the government. Your Aadhaar number has to be intimated by 30th June 2021. Otherwise, there's a penalty of maximum 1,000 rupees. So this is something that is new, and this penalty is under section 234H. How do you remember it, guys? Aadhaar gives your home address. H is home, so 234H is Aadhaar penalty of maximum 1,000. Next is self-assessment. After considering your TDS, TCS, advance tax, if any tax is to be paid, it's considered as self-assessment tax. And these are sections for interest: 234C first, check, 234B, and then 234A. Guys, this is your return of income chapter. I told you it's a very small, sweet little chapter. We will now look at the questions in the module, and we will complete this chapter from there as well. Just 1 second, uploading the document. I'll upload it here itself. I don't think it's converted. You'll have to give me a minute to convert it before we look at the questions. So that's the agenda, guys. Right now I'm looking at return of income sums. Once we finish that, we'll look at computation of income, and then it's an open playground for us to play. Any question, anything you want to do, we could do. So that's how we will look at completing our portion. All right, just uploading it. Guys, all these documents you can find on the Google Drive link, and these are all highlighted copies of the module, so it's very easy to go through them. Here we go. Going backwards. Mr. Akash has undertaken certain transactions during the year, which are the listed below. You are required to identify the transaction in respect of which PAN is mandatory. Guys, generally, any transaction more than 50,000 rupees needs to get your PAN. Immovable property purchase more than 10 lakhs. Motor vehicle, motor car always. So let's see. Payment of life insurance premium 45,000 by account pay check to LIC for ensuring the life of self and spouse. You don't require PAN here because it's not more than 50,000. No, since the amount paid does not exceed 50,000. Next, payment of 1 lakh to a 5-star hotel for stay for 5 days with family, out of which 60,000 was paid in cash. This will definitely require PAN. Yes, since the amount paid in cash exceeds 50,000. Next, payment of 80,000 by ECS through bank account for acquiring the debentures of A Limited more than 50,000, so it will require. Yes, since the amount paid exceeds 50,000. That's generally the reason, guys. Payment of 95,000 by account pay check to Thomas Cook for travel to Dubai for 3 relatives. Yes, more than 50,000. So again, okay, sorry, because it is paid by account pay check, it is not mandatory even though it exceeds 50,000 because your bank account details are already there. Apply to SBI for issue of credit card. For issue of credit card, you definitely need a PAN. Yes, quoting a PAN is mandatory on making an application for banking company for issue of credit card. Examine the reasons whether the following statements are true or false. The assessing officer has the power to allot PAN to any person by whom no tax is payable. Yes, he has the power. And whether Karta of issue is absent from India, the return of income can be verified by any male member. Sorry, it is wrong. It can be verified by any member, not just male. Explain the term return of loss. Can any loss be carried forward even if the return has not been filed as required? Yes, there are 4 such losses. A return of loss. The return should be filed. Following losses are covered under 139(3). These losses cannot be carried forward if return is not filed on time. However, house property loss, unabsorbed depreciation, but they have not given scientific research and family planning, even those can be carried forward even if ROI is not filed on time. Very good question, guys. Mr. Vineet submits his return of income on 12th of September 2022 for AY 22-23, consisting of income under the head salaries, income from house property and bank interest. On 21st December, he realized that he has not claimed reduction under 80 TTA. Can he revise his return? Yes, up to 31st December you can. Would your answer be different if he discovered his omission on 21st March? Sorry, on 21st March you cannot revise your return. State with reasons whether they agree or disagree with the following statements. Return of income of LLP could be verified by any partner. It generally should be verified by a designated partner, and then if that partner is not there, then any other partner. The time limit for filing return of income in case of Mr. A having total turnover of 160 lakhs, that means auditable person, is 31st October. That's right. One second, they're saying disagreeing. One second. Oh, whether or not opting to offer presumptive income. If it's presumptive income, then it's 31st July. If it's not presumptive income, then 31st October. Perfect. That is the question. Look at some illustrations if there are any. Mrs. Hetal, an individual engaged in the business of beauty parlor, has got her books of accounts for the financial year ended audited. So guys, if it's audited, then can they use a tax return preparer? No, 139B does not permit that. This can be maximum MCQ. Remember, Aadhaar is new. Revision and belated return filing has been reduced by 3 months. Those can be definite questions in the exam because they are new and they have changed recently. Explain with brief reason whether the return of income can be revised. Belated return already revised, return of loss, any return can be revised till 31st December and any number of times. Paras, who's 55 years, has interest of 2,88,000 in his credit NRE account, which is exempt, so it will not be included in computation. 30,000 on FD interest and 3,000 saving interest. Is he required to file his return of income? No, not at all. What will be your answer if he's incurred 3 lakh as travel of self and spouse to US? So on that case, he's drinking coffee, and hence he will be required to file his return of income. Perfect. Guys, that's your chapter, and that's our second last chapter. Only one chapter remaining now. That with rates of tax we will finish in some time when we start again. Guys, let's take a nice 10-minute break. Let's come back and let's continue with the next chapter, that is computation of income. We'll also include all the rates of tax in that, and we'll bring it to a very, very good end, our entire DT portion. Alright, back at it and looking at the last chapter, that is computation of income and rates of tax is the last chapter that we're looking at. So just going ahead and putting the details there in. Here we go. So I'm just adding a slide. This one is on rates of tax and computation of income. Guys, what is computation of income and tax liability? Is nothing but an aggregation of whatever we've done till now. So all the chapters that we've done till now, if you add them up, it is nothing but computation of income and then your tax liability. So while we're at it, I will tell you first about the tax liability. So let's talk about rates of taxes, and let's recap all the rates of taxes that we know, and in case we don't know, we learn it from here itself. First is for individual. Guys, whenever in the exam they give you an individual, this is the rate which will be used. For a resident individual, who's 60 years or more, for a resident individual who's 80 years or more. And remember, if your birthday, the 60th birthday or the 80th birthday falls on 1st April 2022, then you are one day before you've completed it. So in the year 21-22, you will be considered a senior citizen. Let me repeat, guys, 1st April 2022, if that is your birthday, 60th or 80th, then you will be considered that year one day before. That means in the financial year 21-22, you will be considered 60 or 80 respectively. And then there is a non-resident individual. These are the people. For resident, the basic exemption limit, and we're talking about first, is basic tax. So the basic exemption limit is 2.5 lakhs. Here it is 3 lakhs. Here it is 5 lakhs. And here it is only 2.5 lakhs. So no higher basic exemption limit for non-resident individual. Then the slabs are the same, 5% up to 5 lakhs. From 5 to 10 lakhs, 20%, and 10 lakh plus is 30%. Same with the others. But here there is a rebate, guys. Rebate is basically under A only, that means basic tax. The moment you calculate basic tax, you will get a rebate. Rebate is if your total income, rebate section is section 87A, and that is only if your total income is up to 5 lakhs. That means for middle class and lower middle class people who are earning up to 5 lakh rupees, there will be a rebate, and the rebate will be maximum 12,500. Lots of people have that idea in mind that it cannot be more than 5 lakh, it cannot be more than 12,500 the rebate. Of course, rebate will not be given to non-resident because they don't vote. That's a simple logic, guys. Non-resident don't get higher basic exemption limit, nor do they get higher rebate because they don't vote. Think of that and you'll get your answer very quickly. Now let's talk about a person who basically is let's say a resident individual, and he has 5 lakh rupees of income, but it is a long term capital gain. So up to 2.5 lakh rupees there will be no tax, and the next 2.5 lakh rupees there will be tax at the rate of 20%. So on that case he will land up paying 50,000 rupees. On that, rebate is only 12,500. So remember, guys, rebate can be given only and only if up to 12,500. Next is B, which is surcharge. The surcharge is basically a tax on the tax. So if you have to have A only, then you can have B. And the surcharge rates are if your income, total income is more than 50 lakh, or double it more than 1 crore, or double it more than 2 crores, or double it and some more than 5 crores. Just 1 second. In that case, or more than 5 crores, in all these cases, there will be a surcharge. This is 10% surcharge, this is 15% surcharge, this is a whooping 25% surcharge, and this is, I don't want to stay in India anymore kind of surcharge, 37%. Guys, these surcharges, how will you remember to apply surcharge? Whenever you see higher incomes of more than these amounts for individuals, you need to apply the surcharge. And remember guys, these two surcharge rates which are really high don't apply to 3 incomes. Which are those 3 incomes? One is dividend income, it does not apply to. So if you have very high income because of dividend, then these higher surcharge will not apply. Then if you have 111A kind of income, that is short-term capital gain on listed UU, and 112A kind of income, that is long-term capital gain on listed UU. In these 3 cases, the higher surcharge will not apply. And of course, C is HEC, which is on A plus B, both you will add and multiply by 4%, and that is what is health and education says, that is at the rate of 4%. This is A, B and C, and that is your answer for individuals. Now, an individual who earns 50 lakh rupees will only pay basic tax, but an individual who earns 51 lakh rupees will not just pay basic tax but will also pay surcharge, and because of that, to just earn 1 lakh rupees more, he will land up paying about 1 lakh plus something tax, which is not fair, it's not logical. Why would I want to earn that extra money if I have to pay more than that as tax? And hence, if let's say the excess, I'm just giving an example, this is not the right calculation, but if the excess is 1 lakh, let's say 12,500, then that extra, that is 12,500, will be given as a relief, which is called marginal relief. So marginal relief is given only to individuals, no to everyone who, because of that slight increase in slight increase in income, are subject to a surcharge. Guys, anyone who is at the border of 50 lakh, 1 crore, 2 crore, 5 crore, these will be subject to marginal relief, so only check it in those cases. Next, adding a new slide, guys, the second person whose taxability we have to see is HUF. Guys, for an HUF, there is basically, A is a basic exemption limit or basic tax, which is basic exemption limit of 2.5 lakhs. Above that, 5%, 20 and 30%. There is no rebate because they don't vote. There is a surcharge which is the same as individuals, and C is always the same, health and education says. So that is HUF, very simple. Again, here marginal relief will also apply because the surcharge rates are the same. 3. What about a partnership firm or LLP? In that case, the A, basic charge, will be 30% flat, no basic exemption limit, no basic exemption limit. In B, the surcharge is very simple. If the total income is more than 1 crore, then surcharge will be at the rate of 12%. And C, HEC, is basically nothing but A plus B. So that is your partnership firm LLP. That is question number 3. Alright. Sorry, not question number, serial number 3, partnership firm LLP. Again guys, here also marginal relief. If your total income is just above 1 crore, then you'll have to check for marginal relief. Going to the fourth one, which is companies, which is not so important at CA inter level, but still we'll understand. For companies, we need to identify whether it's an Indian domestic company or if it's a foreign company. How does it matter? The rate matters. The rate for an Indian company, basic rate, is 30%. And it could also be 25% if not last year 2021 but 1920 your turnover is up to 400 crores, then in that case it will be 25%. And B, sorry, not B, but A, for foreign companies, the basic tax rate will be, the A will be 40%. So this is slightly higher, yes, but the surcharge kind of makes up for it, because the surcharge of the foreign company is 2% if the income is above 1 crore, and it is 5% if the income is above 10 crores. But here it is 2 plus 5, 7% if it's above 1 crore and 12% if it's above 10 crores. I'll tell you how I remember it. 2 plus 5 is 7 and 7 plus 5 is 12. So the gap is of 5, these two you add and then you get it here. And of course C is the same in both the cases, 4%, 4% is the HEC. Here also, if the income is above 1 crore slightly or above 10 crores, you'll have to check for marginal relief. This is companies, foreign company and Indian companies. Next, AOP, BOI, AJPs, all three have a basic exemption limit of 2.5 lakh rupees. Slab rates are the same. Surcharge is the same as individual. HEC is also the same. And last, guys, is cooperative societies. Cooperative societies don't make too much money, so up to 10,000 rupees they will be taxed at the rate of 10%. Up to 20,000, from 10 to 20 they will be taxed at 20%, and above 20,000 rupees they will be taxed at the rate of 30%. That is the slabs for cooperative society. Pretty plain and pretty simple. Okay, now guys, we are doing a very interesting section called 115JC. 115JC and 115JB. JB you will see at CA final, but JC you will see here. This is called alternate minimum tax. The best way to remember is that, let's say your electricity bill this month is only 400 rupees. The electricity department will knock at your door and say, please pay 1000 rupees, and they will make you pay it, and the extra 600 that you get will be a credit. This is the first year. Next year again, if your bill is 400, they will make you pay 1000 and the extra 600 will be a credit. And the third year, if your bill is, let's say, 2700 rupees and they ask you to pay 1000, obviously you will pay 2700 rupees, but you will be able to minus these two credits of 600 and 600 each, that is 1200. That is nothing but alternate minimum tax. So in alternate minimum tax, first up you will calculate your normal or regular tax liability. Regular tax liability means you will find out a total income, you will calculate your tax, and your regular tax liability, let's say, is 10 lakh rupees. So that is your regular tax liability. Now, will you check for AMT? You will check for AMT only and only if you are SAD. That means only 3 deductions should exist, any of them. First up, specified business deduction, that is 3580. If you have any 3580 deduction, that is, those warehouses or slum redevelopment or fertilizer manufacturing, I have a shortcut for 3580. 35 also develop. The government tells you to develop hotels, 2-star hospitals, 100 beds or more, etc. And if you develop these, you get a 100% reduction of capital expenditure. So if you have one of these deductions, then, or if you are an SEZ and you have 10 AA deduction, remember 100% for the first 5 years, then 50 and then 50. Or if you have one of those deductions, which is basically joint return Q, 80 JJAA, 80 QQB and 80 RRB for now. If you have any of these 3 deductions, that means you are SAD, and in case you are SAD, you will have to calculate AMT. So AMT will be checked only if you are SAD, guys, not otherwise. What is the first step? First step is take your total income from your regular tax liability, take your total income and you add the SAD. So basically you will start where you earlier had left and you add SAD. Basically they are saying that ignore SAD. So you had minused it, now you have to add it. Next, step 2, you will calculate, you will take the total amount which we call as adjusted total income. Let's write the right amounts, adjusted total income, and you will multiply 18.5%, which is the alternate minimum tax rate. So 18.5%. If you are in an international financial service center, then this will be 9%. Now step 3 is, guys, you will add surcharge, but surcharge will depend upon ATI, and then you will add HEC and you will find your total alternate minimum tax payable. So this will be the AMT. Let's say it is 11,80,000. So will you pay A 10 lakh or B 11,80,000? You will pay 11,80,000, and the extra 1,80,000 will be allowed as a credit for the next 15 years. Guys, this is the concept of alternate minimum tax. It applies to everyone except companies. So except companies, it applies to everyone, and in case it will apply only if your adjusted total income is greater than 20 lakhs, but this limit is not for partnership firms. So if you see this adjusted total income, it should be more than 20 lakh, only then AMT will apply. That means when you take your total income and you add the SAT deductions, only if that is more than 20 lakh, then this AMT calculation will apply. But this does not apply. This limit of 20 lakhs does not apply to partnership firm. So in case of partnership firm, even if it's 18 lakh, then AMT will apply. Guys, this is alternate minimum tax. Very interesting concept, and which we will check in Computation of Income chapter. Next. Guys, we were very happy paying taxes as an individual and HUF. We had a basic exemption limit of 2.5 lakhs. But the problem was the next rate was 5%, which was great. So on 2.5 lakhs, we were paying nothing. On the next 2.5 lakhs, we were paying 5%. But on the next 5 lakhs, we were straight paying 20%, and after that, we were paying 30%. So if you see, there is a gradual and a very steep increase in your incomes, and also a gradual but a very steep increase in the tax rates, which was basically the older option which we still have. Yes, this is the option that we still have, but the government said that why don't we give you a better alternative choice. So they gave you a section called section 115BAC, which is a better available or a better alternative choice. Now in this section, in this choice, there are some good parts. So first, let's talk about the good part. The first good part is that the slabs increase very slowly. So the first 2.5 lakh rupees is the first slab where the rate is 0. The next 2.5 lakhs, the rate becomes 5, then it becomes 10, then it becomes 15, then it becomes 20, then it becomes 25, and then it becomes 30%. So as you see, instead of having just 1, 2 and 3 slabs, we have 1, 2, 3, 4, 5 and 6 slabs here. So that's a good thing. And this is 5 lakhs, this is up to 7.5, this is up to 10, this is up to 12.5 lakhs, this is up to 15 lakhs, and this is more than 15 lakhs. So this also increases steadily and this also increases steadily. These are two good points. So this is one and this is second good point. Third good point is if that you are in 115 BAC, then alternate minimum tax will not apply. So 115 BAC, alternate minimum tax will not apply. These are some good points about 115 BAC. Now some bad points. In the negatives, the biggest negative which I can see is a lot of deductions you don't get, which we will talk about. So in a lot of different chapters, your deductions have been snatched away. Second bad point is you don't get higher basic exemption limit and you don't get any rebate. So higher basic exemption limit and rebate you don't get. But one more good point here I want to add, that this is a choice that you can change year on year. And you don't even have to tell about the choice. You can use the choice, you can choose whichever you want even on the day of return filing. So there's good amount of choice and you can come back and forth. That means 1 year you can be in this, next year you can be out of it, unless you are in PGBP. So that's an exception. If you are in PGBP, that once you get out, you cannot come in, the doors close forever till you have PGBP. So that's a good thing, the choice is a good thing. So now the negatives. The first negative is a big negative, deductions you will not get. So let's do one chapter and let's see which deductions you will not get. So let's try and see it from here. First, let's take IFOS. In IFOS, we have deductions of poor wins cash income. Will repair pick in general. Will repair pick in general, and there we had a deduction for family pension. That if you get family pension, which is taxable under IFOS, you will get a deduction of 15,000 or 1/3 of the pension received per month, whichever is less. That you will not get now anymore under IFOS. Under capital gain, no change, so it's the same thing. In PGBP, a lot has been changed. Additional scientist developed awesome Covaxin is the shortcut. Additional scientist developed awesome Covaxin is the shortcut. These you will not get. Let's see what these are. Additional depreciation you will not get. If you remember guys, 20% additional you get when you buy plant and machinery, new one, etc. When you're in manufacturing or generation of power, that you will not get. Next, scientific research, that outsiders donation you will not get. So if you donate to outsiders, you will not get a deduction here. In-house you will still get, but outsiders you will not get. Additional scientists developed awesome Also developed 35, 80, 100% reduction you will not get. Awesome area 10A you will not get. Additional scientists developed awesome Covaxin, that means when you donate for skill development, etc., those which you will see at CA final, those also you will not get. So in PGBP you will not get. And by the way guys, even when you come to set off chapter, if you don't get additional depreciation, even the carry forward you don't get. If you don't get scientific expenditure, even the carry forward, same thing with specified business, even the carry forward set off you will not get for business. Next, income from house property. You will not get 24B interest deduction for only for SOPs. You will not get this. So SOPs anyways you don't offer anything to the government, so they will not give you this 24B deduction, and again the set off of that also will not be able to get. You cannot carry it forward to the next year. And in salaries there's a big deal, you will not get any deduction. So no SEP standard deduction, no LTC 1015, no HRA 1013A, all that you will not get, except blind can do tours. That is the only shortcut. That is, blind people, when they get exemption of 30,200 per month, they will still get conveyance on the amount spent, daily amount on the amount spent, and tour and transfer on the amount spent. These 4 you will still get. Otherwise in salary you will not get anything. Next, in clubbing you will not get 1032. I'm just going in that same pattern. In exemptions you will not get 1017, and of course 10 awesome area you will anyways not get. Set off we've already seen what you will not get. After that, deductions under chapter 6A, you will not get any deductions except 2 80 JJA, because they are expected to add jobs, so you will get that 30% deduction, and 80 CCD2, that national pension scheme which your employer contributes, you will get as a deduction. So these are the only deductions you will get. Otherwise guys, nothing, no ATC, no ATD, no T, nothing you will get. So deductions have been completely taken away. So if they say choose 115 BSc, remove all the deductions, but keep the incomes as the same. Incomes there is no change, only the deductions will change. Just 1 second guys. Alright, so we'll do some sums on this, but right now guys, I still remember NPS. I had told you 80 CCD2 I want to discuss, so let me discuss that a little bit, because there's a sum on that also which had come, so let me talk about that. Guys, NPS can be divided into 2 parts. Your contribution, that is the employee or the self-employed person's contribution. For that you will get a deduction under 80 CCD1, which is up to 10% of your salary, that is BDC, or 20% of your gross total income, you will get the deduction, and this is within the overall umbrella limit of 1.5 lakhs. If you want to contribute more over and above that umbrella limit, you can contribute under 80 CCD1B up to 50,000 more. That is, these are your deductions because you are contributing. Now let's say the employer contributes. So right now guys, this is done, and just forget this. This is your contribution, and you get two impacts for your contribution. But let's say your master or your employer contributes. So let's see what happens in that case. First, because he is contributing, there are 3 repercussions, 1, 2 and 3. Very, very careful, watch out guys. When you contribute, 2 repercussions. When your master contributes, there are 3 repercussions. First, he will get a deduction under section 3614A. He will get a deduction of 10% of the salary, and if it's a central government employer, then he will get 14% of salary. Salary is BDC, so he will get this deduction. What if he pays more? Still he will get only this deduction, and whatever he gets a deduction, you will also get a deduction under section under section 80 CCD2. Why will you get? I'll tell you the logic, but please remember, whatever deduction he gets, even you get the same. Anyways, so there are three repercussions. The first repercussion is your employer will get a deduction under PGBP 3614A of 10% of salary or 14% of salary if it's a central government employee. So let's say he contributes 3 lakh rupees, but 10% of salary is only 2 lakh 10, so he'll get a deduction of 2 lakh 10. This entire 3 lakh rupees which he has contributed, is it benefiting the employee? Yes. So the entire 3 lakh will be taxable under the head salaries. This is basically from your master's perspective. This is the slave's perspective. In the slave salary, you'll add 3 lakhs, and because you added the entire 3 lakhs, they give you a deduction under 80 CCD2 of whatever this amount is, the same amount you will get. So 2 impact in the slave's hands and 1 impact in the master's hand. I'll repeat again, guys. Master's contribution 3 impacts, your own contribution 2 impacts. Your contribution 80 CCD1, 80 CCD1B. Master's contribution 3 impacts. 1, PGPP, he will get a deduction of 10% or 14%. That whatever he contributes, not the deduction, whatever he contributes will be added to your salaries, and you can minus under 80 CCD2 in that case. So these are the 3 implications of master's contribution. Alright, just checking if there's anything else in computation of income. Okay, higher basic exemption limit for resident individuals, rebate, surcharge. Non-residents don't get higher basic exemption limit as well as rebate. By the way, guys, non-residents don't get a lot of things. They don't get higher basic exemption limit because they don't vote. They don't get rebate under section 87A. They can't even adjust basic exemption limit under section 112, 112A and 111A. They don't get this benefit as well. This rebate benefit is not available under 112A income anyways. HUF is the same. Share of members of the HUF is exempt. Partner share of partners is exempt. Domestic companies, we already seen it. Foreign companies, marginal relief we've seen. This is 115B, ASC. And this is alternate minimum tax. Perfect. And with that, guys, we complete the portion. What we are now going to do is we are going to open up to the computation of income chapter. I'm just going to convert the file, and we are going to look at questions back to back from that chapter. So just going to convert that file. 1 minute. Perfect. Waiting for it to download, and then alright, so this is the chapter. Let's try and do as many sums as we can from this chapter, starting from the end, and we'll go backwards. There are 11 sums, so that's a good start to the sums that we got to do. I'm putting up a question first which I'd want you all to try individually before we discuss. So here it is. Perfect. Guys, here this is the first sum. I'm keeping this on the screen for all of you all to try. 5 minutes are yours, and then we will start. Let's do this. Alright, let's do this, guys. In this one, Miss Charlie is an American national who got married to Mr. Radhe of India in USA on 2nd of March 2021 and came to India for the first time. This is very important, guys. That means earlier she has not come. She's an American national on 16th of March 2021. First, what are the questions, guys? Always check the questions in the exam for big questions like these, because if you read aimlessly, there's no point. Determine her residential status and compute total income chargeable to tax along with any amount of tax liability. So basically, residential status, total income, tax liability. And then will a residential status undergo any change? So we'll do the first one. She came to India on, she's an individual, so basically basic condition 1 has to be checked. Stay in India greater than or equal to 182 days. Let's check. She left for USA on the 19th of September 2021. So basically April, May, June, July, August, so about 5 months and 19 days she was here. She returned to India on 27, so 27, 28, 29, 30, 31, 5 more days. So here, I don't have a calculator, so I'm just going to calculate it from here. So this is Miss Charlie and her stay in India from 1st April to 19th and to last 5 days is 177 days. So basically she has not been staying in India for greater than or equal to 182 days. Basic condition 2 will apply to her, but although she stayed in India greater than or equal to 60 days, but in the last 4 years her stay in India is not greater than or equal to 365 days. So she is a non-resident and hence only her dear income will be taxable. So the answer for the first one is residential status is a non-resident. Now, while in India, she had purchased a showroom in Mumbai on 30th April, which was leased out to a company at a rent of 25,000 per month from 1st May. So 25,000 into 11, basically it's 2,25,000 will be the rent for the year. She had taken a loan from a bank for the purchase of the showroom, on which the bank had charged interest of 97,500 up to 31st March. On this, guys, you will do municipal taxes not given, you will do a 70% of this and then you will minus 97,500 and you will get income from house property. That answer will be taxable. And then she had received following cash gifts from her friends. So cash gift basically means MISB SATJOY, yes. From parents of husband, if you remember, guys, 232 relatives. 2 basically that means your spouse. 3 is your brother and sisters, your husband's brother and sisters, and your parents' brother and sisters. And LA and Delhi, people above you, people below you, and for your husband also, people above them, people below you are your relatives. So this is a relative and hence not taxable. Married sister of husband is a relative, not taxable. 2 very close friends, even if they are very close, guys, this one will be taxable. So this is IFOS, no deduction, 1,72,000 will also be taxable. So this will be a total income, just checking that also. So this one 30%, 97,500, so 95,000 and 1,72,000, 2,67,000. So only on 2,50,000 to 2,65,000 on that there will be tax, no rebate because she is a non-resident. So 880 is a tax liability. Would her residential status undergo any change, assuming that she is a person of Indian origin and her total income from Indian sources is 18 lakhs? Guys, if she is a person of Indian origin, then the first basic condition will not apply, so she will still be a non-resident. Okay, so first basic condition will not apply. Second basic condition, no, actually nothing will change because she is still not satisfying. Guys, technically I'll tell you what is this. They are saying that will the amendment apply? Amendment says that the Indian income is greater than 15 lakh. The second basic condition will apply, but in that case 360 will be replaced by 120 days, but even then she doesn't reach 365 days and hence nothing will change here. So further, therefore her residential status would be a non-resident even that year, so there is no change absolutely. That's the first question, guys. Now looking at the second question, over to you all. First, see the question, guys. This is exactly how an exam question is asked. there is an expenditure account, there is an income account. There is a person and they will ask you to compute total income. Basically that means residential status are 5 heads of income under the regular provisions, assuming that she has not opted for 115 BSc. Basically you're only required to calculate total income, not her tax payable also. So what we need to do, guys, is we need to figure if everything is right. She's a clinic in Surat, she's a doctor, so we'll have to figure her PGBP separately and all the other heads separately. I'm giving you 5 minutes, first 1 minute for this sheet and the next 4 minutes for the next sheet. Medicines consumed, staff salary, consultation, medical charges, income tax refund, principal and interest. Here I can say that this is perfectly okay, this seems okay for now, this seems okay, but income tax refund is not an income, just the way income tax payment is not an expense. So this one you will have to add back, sorry, they have added it, so you'll have to minus 5450. But interest is okay, so that you will take to IFOS. First you'll remove entire 5450 from PGBP and 450 you will take to IFOS. I'm keeping this on the screen. Read the question, guys, and then we will start discussing. Zoom into your laptop or zoom into your phones. Just 1 second. And try and see 5 minutes before we start discussing it together. Guys, in this case, we will have to basically start with always and always the last number, that is the net profit, which is 4,40,400. So I'm just writing it here. PGBP 4,40,400. This will go in your working note. I'll tell you how to present it also. So you will start by writing what they've asked you. Compute the total income. So you will do your sum. You will write computation of total income of Dr. Niranjana for assessment year, previous year, etc. You will make amount, and you will make particulars. In particulars, you will write whatever details they've given you, whatever incomes they have. They basically have PGBP, so you will write PGBP and you will write working note 1. If they have salaries, you will write salaries. Of course, you will write in that order only: salaries, then IFHP, then PGBP, capital gains, and working note 1. And you will do the calculation here in the working note. So assume, guys, this is working note 1. All this calculation will not happen in the main table. Now you will minus 5,450 because we had added it, and you will add only 450 to IFOS, and you will write the reason, because income tax refund is not income and this is interest on income tax refund, so that is 450. So we've done that. Next, dividend from units of UTI, again 10,500. This is to be removed, so I'll remove 10,500 from PGBP and I'll add 10,500 to IFOS because dividends have only one direction. Winnings from game show, net of TDS 15,000, that is 35. So you'll remove 35 from here. So you will remove 35 from here and always add the gross amount to IFOS. And remember, if you had to do tax, then you could take a credit of 15,000. Clinic consumables, rent paid, administrative expenses amount. This all looks okay till now, but let's see the additional information. Rent paid includes 30,000 paid by account check towards rent for a residential house in Surat. So rent paid, which is 90, 30 is wrong, so we've minused it. We'll have to add 30. So this is, you'll have to add 30. This is, I'm adding 30. And as in when you complete 1-1 adjustment, please tick mark. Clinic equipment, guys, as you can see, there is no depreciation given anywhere, so you will have to calculate depreciation. The opening WDV of clinical equipments is 5 lakh. On 7th of December, that is less than 180 days, you acquired by check 2 lakh. So on this you will take entirely 15%, and on this you will take 7.5%, and you will minus these two from depreciation. So I'm not calculating it, I'm just minusing depreciation. Rent received relates to a residential house property at Surat. Gross annual value is 27,000. Municipal tax 2,000 paid in December 21, that is during the year, has been included in administrative expenses. rent received guys here 27, so you've added it. I'll have to minus 27 and I'll have to take it to IFHP. In IFHP this is 27,000. Administrative expenses 2,55,000 has 2,000 of municipal tax, so you have to add it because that is not right there, and you will minus municipal taxes here, and from 25,000 you will do 70% of that, and that's how you will get your answer, income from house property. So this is also done. She received salary of 7,500 per month from Full Care Hospital, which has not been included in the consultation and medical charges. So she has some salary income as well, lots of heads. Salary income 7,500 into 12, but make sure you minus 50,000 because SAP minus SEP always. Next guys, Dr. Niranjana availed a loan of 5,50,000 from a bank for higher education of her daughter. She repaid principal of 1 lakh and interest of 55,000. Remember guys, this is her total income. You will get GTI once you put IFHP, once you put salaries, once you put IFOS, you'll get GTI. From that you can minus 80E, but E is expensive interest, only of the interest you can minus 55,000. Here we go, we can minus 55,000 80E. She paid 1 lakh as tuition fee, not in the nature of development donation, to the university for full-time education of her daughter. So that also you can minus under 80C, you can minus 1 lakh rupees. Remember 180C has a limit of 1.5 lakhs. An amount of 28,000 has also been paid by check on 27 March for a medical insurance premium. So 80D also you can minus, assuming she is more than 60, you can minus 28. I don't know her age guys here, 60 years. So 60 or more, so she can take 28,000 here as well. Guys, this is how you do a sum like this, very easy, and you will do the calculation here and you will get PGBP profit. You will do the calculation, you will get IFOS, IFHP and salaries. Just showing you the calculation. Salary less deduction, IFHP same, this rent received you've less, dividend you've reduced, winning from lotteries, income tax refund you've reduced, depreciation you calculated exactly the same that we had done. Then add rent because that's a residential house, you minus it, and municipal tax also. Income from IFOS, there are 3 incomes, gross total income 80C, 80D and 80E, and that's how you get your answer and that's how you get your marks. That is the second question. Moving to the third one right now. Over to you all. First read this and then we will discuss. That is exam like, because again expenditure account, again income account, you now know the drill. She's Purvi and she's a chartered accountant. So let's see what is Purvi up to. She's into practice, so basically PGBP. She maintains her accounts on cash basis. Really interesting, because guys, is it allowed to maintain on cash basis? Definitely yes. But what you need to do now, because she's maintaining it on cash basis, only whatever is received you will add in income, and only whatever is paid you will take as expenses, nothing else. Her income and expenditure account for the year March 31, 2022 read as follows. Fees is okay, audit, tax and consultancy 55 lakhs, that's a good amount of fees. Just a second. Dividend is, we'll have to remove this, this has been added, we'll have to minus it. Income from UTI, again we'll have to minus it. Honorarium received from various institutions, this is also IFOS, we'll have to minus it. And rent received from individual flat let out, we'll have to minus it and take it to the different respective heads. From the expenses front, salary to staff looks okay, stipend to article assistant looks okay, incentive to article assistants looks okay, office rent looks okay, printing and stationery looks okay, everything here looks okay as long as we don't see additional information, everything goes okay. Meeting, seminar, purchase of car for official use, this definitely we'll have to add, they have minused it. And what we'll have to do is you'll have to minus depreciation. Repair, maintenance, petrol of car, traveling expenses, municipal tax paid in respect of house property, this again we'll have to add. Net profit, so again guys, what we'll have to do is compute the income and the tax payable. So we'll have to write computation of total income and tax payable of Miss Purvi for the year, etc., etc. We'll have to make amount and particulars column, and here let's start writing. So the first working note will always be of PGBP, and we will start with the net profit, that is 9,28,224. So 9,28,224. Guys, these are as good as doing examination questions because very interesting. Now first, whatever we know, we can do it already. So 10,524, 7,600, 10,524, I'm removing from here, 10,524 and 7,600 I'm removing from here, and I'm putting both of them in IFOS 10,524 and 7,600. Honorarium 15,800 and 85,600. So 15,800 I'm removing from here and I'm putting it here, 15,800, and 85,600 I'm removing from here, but I can't put it in IFOS, I'll have to put it in IFHP, that is 85,600. Also, the moment I see this, I see municipal tax, that is 3,000 I can minus, so 82,600. And this I'll have to add here, add 3,000 because it does not belong to here, add 80,000 because it does not belong here. We will minus depreciation on this car as well as any other depreciation. Anything else that needs to be changed doesn't look like right now. Let's see the additional information. Allowable rate of depreciation on motor car is 15%. So on that 80,000 we'll minus 15%. Value of benefits received from clients during the course of profession is 10,500. So any benefits received have to be added. So unless it's not a part of it, we'll have to add 10,500. As in when you finish something, please keep tick marking it. Incentive to article assistance is perfectly okay, and it's been minus as an expense. Guys, here repair and maintenance of car includes 2,000 for the period from 1st October to 30th September 2022. That means it's for the next year, some part of it, but because it's on payment basis, that's perfectly fine. Salary includes 30,000 to a computer specialist in cash for assisting Miss Purvi in one professional assignment. That is not allowed, guys. You're not allowed to pay, even though you follow cash basis of accounting. Cash basis means payment and receipt basis. You're not allowed to pay so much in cash. You minused it, so we'll have to add 30,000. Next, the traveling expense include expenditure incurred on foreign tour of 30,000, which was within RBI norm, so that is perfectly okay. Medical insurance premium on the health of dependent brother and major son amounts to 5,000 and 10,000 respectively, paid in cash. Guys, medical insurance premium you cannot pay in cash, so these will not be allowed under 80D. She had invested an amount of 10,000 in national savings certificate, so that will go under 80C, that is 10,000, and paid a low 70,000 towards advance tax, so you can take a credit of this. So basically this is what it will look like. Let's see the answer now. Guys, you've taken income from house property, which is here. Let's see. $85,600 minus 3,000, 82,600 and 70% of that. This is perfectly fine. We started with this 30, 80 and 3,000 we added. Value of benefit we had added. Less dividend we minused. 7,600, this also we minus, so perfect. And we took depreciation, which is perfect, so this also is perfectly fine. Dividend, income from UTI, honorarium, this is IFOS, perfectly fine. And 80C and nothing in 80D, this is also perfectly fine. So guys, our answer is perfectly good as long as you're presenting it well and giving appropriate working notes. Guys, over to the next question. Here we go, keeping it on the screen for a couple of minutes before we dive into the sum. Please have a look. This opening stock, closing stock is very important, again from an exam perspective sum. Alright, let's do this. Mr. Y carries on his own business. That's nice. An analysis of his trading and profit and loss account for the year ended 31st March 22 revealed the following information. The net profit was 11 lakh 20. In a sum this big, always guys look at what they're asking you. Compute this total income assuming he has not opted to pay tax under 115 BAC. So basically you're computing his total income, and when you do that you will need details of the different heads of income. So you will have working note 1 11 lakh 20. So working note 1 PGBP, and that is 11 lakh 20,000. The following incomes were credited in his P&L account. Income from UTI 22,000, debentures and racehorses, all of them are credited already, so you have to remove it. 22, 17, 500 and 15,000. 22,000 I'm removing, 17,500 I'm removing, and 15,000 I'm removing. All these three will go in IFOS. 22 it will go here, 17,500 will go here, and 15,000 will also go here. Next, it was found that some stocks were omitted to be included in both the opening and closing stock. Remember one guys, if the closing stock is lower, your profit is lower. So closing stock is lower, so you have to add 12,000. And opening stock is lower, so you'll have to minus 8,000. So that is the net impact. This was there in an exam paper. I'll show you next time when we do exam papers as well. 1 lakh was debited in the P&L account being contribution to university approved. This is perfectly okay. Salary includes 20,000 paid to his brother, which is unreasonable to extent of 2,500. So we'll have to add 2,500. Advertisement expenses include 15 gift packages of dry fruits presented to important customers. That's perfectly okay. Total expenses on car was 78,000. The car was used for business and personal purposes. 3/4 is for business. So guys, 1/4 is personal. So whatever is personal, you'll have to add 1/4 of the expenses. I'm not calculating, but 1/4 you'll have to add. Miscellaneous expenses included 30,000 paid to A&M company and GTA operator in cash for distribution of the company's product to warehouses. Generally guys, when the GTA pays in cash, it's allowed to them, but this one will have to be added back. I'm just showing you this one here. 30,000. They haven't added it, so they have assumed that even to a GTA is okay. Disallowance under 48(3) is not attracted in respect of cash payment exceeding 10,000 to A&M company or goods transport operator, since in case of payment made for plying, hiring or leasing goods carriages, increased limit of 35,000. So not just the GTA, even when you pay to a GTA, they are allowing it. Okay. Some ICAI questions have taken a contrary view, but that's okay. Depreciation debited in the books was 55. As per income tax was 50. So you will add, you minus 55. So you will add 55 and you will minus 50. Drawings as nothing. Investment you will get under 80C. So this is how your sum will look like. And that brings us to the fifth question. Guys, you can look at the question. Very, very interesting question. And these are exactly how the 14-mark questions at the start of the book are. But what happens is usually by the time people come to this chapter, they are so tired that they leave all these questions, and hence this video is absolutely important. Watch it till the end, till we do all 11 questions. Right now it's that time of the day when I have to call it a time off. So I'll see you guys now back after the break, and we will continue. We will do all the questions starting from 5th, and only then we will dive into the exam questions. See you guys in the next session.